What is up, everyone? Welcome back to this channel. Today, as you can see from the title, we are going to show you how you can invest in the top 500 US-based companies for under $300.
With less than 1% fees.
Less than 1% fees. On top of that, no fee trading, which is with the app Robinhood, which you can check that link in the description below. It's an affiliate link. I do get a free stock, but you also get a free stock invested. But it's a great app. If you don't use it already, I suggest downloading it. We both use it. Great app. Tell them what we're explaining to them about what they can invest in for $300, that they are going to be exposed to over 500 of these companies.
Sure. Today we're going to be talking about index funds. For those of you that don't know, owning part of an index fund, a couple shares within an index fund, gives you full market exposure to that index, whether it be a sector like industrials or technology, or it be something like emerging markets, having exposure to China. But what stocks do you pick within China? You're not sure, right? So you can buy a basket of pre-selected stocks which are passively managed. This gives you fees sometimes lower than 0.1%. Today we're going to be talking specifically, though, about the S&P 500. Spider has a great index fund, SPY. This is traded over $22 billion of volume a day. It's one of the most, if not the most, actively traded options on the market. Gives you a lot of liquidity, very easy to buy and sell. It reduces the volatility within your portfolio, which is great, and it has outperformed active mutual fund performers by 80% of the time, historically over the past 30 years.
Wow, that's pretty crazy.
Yes, it is, Dom.
We want to show you how exactly you can invest in it, which it's not a hard process. We don't need to sit with you and click your mouse on your computer to do it. But download the Robinhood app, essentially. Once you're in the Robinhood app, type SPY. First, you'll obviously have to fund your Robinhood. Put $300 in it if that's all you can afford to buy one of the SPY. But then you're exposed to those 500 companies and how they trade.
So some of the benefits of investing in the index are that you can passively invest into the greatest 500 companies, and it's a low turnover. It's a quarterly, which means that only 4 times a year are these companies going to be swapped in and out. One of the requirements of being included in the 500 greatest companies within the United States in the SPY are that they have to have 4 past quarters of positive earnings. This means that they're positive producing cash flow, which means that they can pay off debt and that they actually are positive, strong companies for the economy and for you to be investing in. And then further beyond that, another benefit is that you can kind of sit back and relax knowing that you are invested into the economy when it is booming, and that your downside will be limited kind of in that you are only invested in the strongest names in the economy, so you have the ability to kind of hold onto this portfolio for 20 years, even if we do face a recession within the next couple of years. As interest rates rise or whatever happens, you have the ability to sit back on this and not do any panic selling as most people do, and you can actually kind of ride the wave. You might want to do something called dollar cost averaging, meaning that every, let's say you receive bi-weekly paychecks, every paycheck that you receive, you might want to invest $50 into this index. So regardless of the price at the time, you're kind of be buying an average price over time, and assuming that the market increases at an annualized rate of about 7% a year, if not more, you're going to be making money year over year, ideally.
Wow. That actually is pretty crazy.
Yes, it is.
Would you say that investing in the SPY and investing in index funds is more of a passive way to invest and a smarter way to invest than picking your own stocks?
Yeah, sure. So I've been day trading for 6 years. I've seen hundreds of people firsthand fail at day trading. A lot of people think that buying and selling stocks on news, whether it be Bloomberg alerts or something like that, is easy. It really isn't. It's not. Typically the market will have priced in news things before, or they're going to be actually taunting you in one direction, the stock will move in another. I used to trade FDA drug releases. It's very difficult to time, and often the volatility is priced in. So for the average individual, it's not recommended to do day trading. If you're more interested in that, I advise you to not trade any more money than you can afford to lose. I would say assume that you're going to lose 100% of it, and if you're not comfortable with that, you shouldn't be day trading that much capital. So to be passively investing is the proper way for most people if they don't have time to spend that much in front of their computer.
Yeah, it definitely makes sense, and I like the term passive investing because on this channel, us people on here, we like making passive income. You know what I'm saying? Yes, we like making that passive money.
Yes.
But I think you covered a majority of the things. I just wanted to do a quick video here addressing some comments that I've had. I had my friend Zach, which we are both not financial advisors, but technically, are you a financial advisor?
So I have my Series 63 and my Series 7.
Okay.
I'm not a registered investment advisor, but I do have the ability to act as a broker. Okay. So I do have some fiduciary duty, but I'm not working with a broker right now. But I do know the ins and outs of part of the FINRA laws and the SEC, but again, don't invest anything more than you can afford to lose. And we are not responsible for any actions you take due to the outcome of this video.
Yeah, absolutely. We're thinking about doing some type of series with this, maybe doing different ways of investing, but this is one way that I think that if you have $300, $500, or $1,000 sitting in a savings account, which a lot of people do. I know so many people that don't invest and they just have a savings account. Take a couple $100, put it into this SPY. Our market is relatively high. We are in a bull market, so I don't know addressing that concern there, but always investing in the market at any time. You're timing the long-term play.
Exactly.
The stock market, I read this quote, you might have heard this. The stock market takes the money from the impatient and gives it to the patient.
That's Warren Buffett for you.
It was Warren Buffett.
That's Warren Buffett, yeah.
And I read that quote and I was like, it's really true. So you have to be patient in the stock market. Don't expect to make $1 million overnight. Investing is not just a one-time thing. You want to do it over and over and make it even a habit to invest weekly, because putting money away weekly, it's only going to compound, like he said, every month. But,
exactly.
Yeah, thanks for being here, Zach. I appreciate your time.
Thanks for having me, Dom.
No problem. Thank you all for watching this video. If you enjoyed the content, give me a like, give me a dislike. Let me know in the comments below if you like Zach on this channel, because if you don't, I want those hate comments, because I need to know. I need to know. But thank you so much, everyone, and we'll see you guys in the next video. Peace.